Alrighty, I think we're going to be going live here. Let's see. Let me know if we're good to go here. What's up? It's Sunday morning, kind of flying by the seat of my pants here. I'm going to talk about some more dividend stocks, but I want input from you guys. So I don't know. Check this overlay out. I got my little setup going here. We're going to see if this is working. Now look at, I got a border around me. Dude. All right, cool. So, yeah, this is going to be a bit of a learning experience here. I'm not seeing the chat, and this is not going to work. I might need my wife's assistance here. Hey, Jen, wife, I need you for a second. So, this is unprofessional here in the world of Dapper dividends, but we're making progress. We're making a little bit of progress here, so bear with me for just a minute. I've got this other laptop here next to me so I can see chat because I want to go full screen with you guys, and I don't see where there is chat here. So that's no bueno. We got 3 of you. What's up, everybody? Let me know. Somebody chat. Say something. I want to see if this pops up. Look at this. Where's it? I got my little counter down here. That took me a little bit of time to figure out. And is the audio good? Hopefully it's good. This could be an issue. Here, let me. Why are we not chatting here? Anyway, I don't see the chat on my other screen here. Where is chat? Live chat. Hey, what's up, Dennis? He's back. So I've got this other window open here on my other computer, and I can't see chat. Ah, there we go. Okay, good. Good. I sound much better. Oh, what a mess. So let me see if I can do this then. If I minimize this, you guys should be able to see my screen. You should be able to see that wonderful bridge portfolio I'm building. So it's kind of cool. You're going to see this in the past. There's a bit of a delay here. And it's crazy. Like you're literally learning this with me. And there's a 15-second delay. So in order for me to get to that point where I'm trying to make sure I got my full screen up, we're going to get there. Someday we'll be a little bit more advanced. And I'm watching what you guys are watching here next to me. Boy, this is really delayed. Come on, baby. Come on, you can do it. Oh, I know what the problem is. I'm on full screen. Check this out. I got my little hotkeys here. So let's see if this works. Let's go to the full desktop. Voila. And I think now it's going to go off of me and it's going to go on to all y'all people out here in the world. How is it? It's Sunday morning and I just thought we would jump on and share some ideas. I wanted to hear a little bit from you guys. I wanted to hear what's going on in your world. Both T and VZ. Yeah, I think so. I think the selling was indeed overdone. And yeah, good. Thank you so much for bearing with me here. So I'm viewing your live I'm viewing the live chat. VZ, I got 17 things rolling around my noggin right now. And T and VZ and T-Mobile, TMUS, they're both going up. So here, real quick, I think, let me double check. I got my screen up. Ooh, there we go. There we go. It worked with my transition. So we got my Pepsi chart, and I figured I'd try this. Let me see on the, let me go on the daily. I love charting. It's in, yeah. So this big red candle here, what a drop. That was a one-day drop from 27 to 24. That was nasty. So yeah, we're recovering a little bit, and I think T's going to run back up lot of resistance around 27.50 area, so I'm not sure we're going to be able to break that. Yeah, you know, Dennis, it's going to be a minute. It's going to be a minute for T. Here, let me zoom out on this and look at the weekly. So if you don't know charting, each one of these candlesticks is a week's price activity. And from what I see here, yeah, there's going to be a lot of resistance around 32 bucks. But we got to break that 27.50. And this is a lot of weeks, so this is going back to May, middle of May, when we had that huge drop. Yeah, so AT&T is going to recover in a minute. So real quick, I bought my 85th share of Pepsi. Let's go down here. And it is not, there it is. We'll sort this by shares. So I got 85 shares now, and I'm up 17.2%. Now, 22.3%, this is that experiment I'm running, and you never really want to see a position be, I would say, over 10% of a portfolio, because anything can happen. Any crazy thing can happen. And these stocks can drop. Any company can drop at any time for any reason. And you just got to be prepared. Now, it's highly unlikely that Pepsi does drop. And yeah, as I look just at this bridge, remember, this is just one portfolio I was building to share. My thoughts about OHI. Well, check this out. Before I went to post, I hit, not latest. Oh, here, if I click my portfolio, so Omega Healthcare declared their next dividend. There was no change. So they've been pretty much frozen at 67 cents for a minute here. So, yeah, apologize. I'm still playing with this, making sure we're working. So I'm talking to the camera, and what I'm seeing over here on my other Surface Pro is like 15 to 20 seconds behind. So as soon as I do something here, it's taking 20 seconds. So it's this really weird thing to talk to all y'all and be watching what's going on. Boy, I look a little bright. It's bright down here. It's a sunny Sunday. Anyway, let's get to your Omega. Yeah, so they get an unsafe dividend score, which is potential for a cut. And I do believe it's been a minute, so they keep growing it. It's been growing since 2002. The very slow growth, obviously no growth in the last little while. All right, here we go. Actually, November of 2019 was the last time they increased it, and they did a penny. So, you know, it's got a really high yield. I think the healthcare industry, people are going to need it. There's a lot of baby boomers that are still retiring, and I might start a small position, and let me actually check it on the chart. I haven't looked at OHI in a hot minute. Let's see. Look at that. We got 6 people here. I got a little counter down there. I'm so proud of myself. I was able to put that up. This is the ad, so, you know, I try to go things cheap and frugal here. So, looks like OHI on the weekly chart caught support just below 28. So it has support right around 28. Looks like it's dipping around again. Basically, it's been in this range between 37 and 28. Obviously, this is the outlier, this big drop back in March of 2020. But, you know, I think we're going to trade in this range for a while. So I wouldn't mind picking up a little bit of a position, not going all in. Obviously, the market's been having a bit of a struggle as of late. Dude, it reminds me of Rasputin. If anybody knows the story of Rasputin, the dude wouldn't die. I think he was shot, stabbed, poisoned. He was dropped in, was it the Elba River, or I think of whatever that river is that goes through St. Petersburg. The market reminds me. I mean, we have Omicron, we have Fed rate hikes. It just takes these shots, and it just keeps, it's like a vampire. I stole that from Jeremy Grantham, by the way. Here, let me move this so I can see you guys chatting with me. Yes, Nora, what's up? It's charming to chat in a small group. Good. And that's what I'd like. I just want us to share a few ideas. Whoever wants to wander on in. Real quick, I love reading articles from researchers. And Jeremy Grantham, I'll put a link to this article. I'm sure I could do it in chat somehow. But anyway, you could search Jeremy Grantham newsletter. from his GMO. And dude, chat, let me blow this up a little bit. So he was pointing out how stock markets in the past have had blow off tops. So this one right here was before the Great Depression in 1929. So it just up, and then it blew off. We had a drop down. This was the tech bubble in 2000. We were going up. Yes, I love you guys. So he's just basically pointing out how with the Black Friday, the stock market crash in 29, the tech bubble, the Japan in 1989, they all had just blow off tops, and we haven't had that yet. So Jeremy Grantham thinks there's a big super bubble coming. Who knows? But I thought that was interesting. And it was a really interesting article as he points out the 4 bubbles that he sees going on right now. Watching crypto charts. Yeah, what are you in, Nora? What's your favorite? What's your crypto right now? What do you like? I'm basically almost at 1 ETH. I think I have 0.95 or 96, so I should just get there. I probably will. I keep thinking it's going to drop, but I was in all of these speculative ones. If you know me, Wanchain was one that I got into with Zookeeper. It's a fun little game for yield farming, and you can cross-chain. See a squeaky chair here. Yeah, you're in the middle of it. Yeah, so I'm here. Let me do this. Watch this. Watch me now. Let me check out this overlay. Hold on. Bam! I think this is going to work now. I think I'm going to have a little border here, and I'm going to be in the bottom. I spent all day yesterday learning about Streamlabs and overlays, so it's going to take some work. Working on a full ETH too. Yeah, or no, I am, yeah. Yeah, Dogecoin. I was in Doge for a minute, and then I got out. 15K Doge. Nice. Yeah, I'll probably do it this week. That was my goal. I wanted 1 full ETH, just to say I have a full ETH. I think there's like 119 million, I think. Bitcoin's the 21 million. Interesting. I listen to other podcasts, and it's funny to hear how the Bitcoiners and the Bitcoin maximalists and the ETH maximalists, they just ARK. Yeah. Dude, did you hear that there's a ARK? What is it? ARK has let me see if I can Google it. So there's an ETF that basically shorts everything that Cathie Wood buys. Let's see if I can find it. It had a funny name. What is it? What is it called? If anybody knows, let me know. There is... Here, maybe this is it. Let's see what we got. I can't... Barons. No, I'm not paying you, Barons. Yeah, if anyone knows it, let me know. But there is an ARK short ETF. Here it is. SARK. S-A-R-K. So you can get in on SARK, which has probably been doing pretty well. Yeah, the Tuttle Capital Short Innovation ETF, or in other words, SARK. So basically, from what I understand, yeah, it's an ETF that shorts another ETF. So this just shorts everything that Cathie Wood buys, which is kind of interesting. Yeah, absolutely, Nora. Thank you for stopping on by. I really do appreciate that. Thank you. Gracias, amiga mia. So anyway, what are we talking about here? I had a few notes. I don't know. Somebody shoot me an idea. ARK. Let's see if we can look that up on the chart if ARK comes up. I believe it will. Let's see. They got the ETF. There it is, the ARK Innovation. Oof. So it hit a high of $158 back in February of 21. So in 1 year, it's down from 158 to 68.91. Ouch. Ouch. Fed interest rate increase. Yeah, I mean, everybody for a hot minute there. I even did a video back in the, not too long ago about Cathie Wood and what she was buying. I know she was a neophyte. Yeah, Well, the rate hikes are coming, and it's kind of funny because they were so low that I think they're negative in a real rate. However they say that. Having a brain fart here, but basically they brought the ETF or the interest rate so low that now they're going to increase them 2%, and it might still be low enough compared to what it was traditionally in the past. Germany, dude, I want to go to Germany someday. I'm super big oil. I think they have room to run. I think that big oil is... I think I mentioned it last time I had read in AAA, they don't expect travel to decrease. It's going to be a long time before EVs completely knock out oil, in my opinion. I think it could be a decade or two, and energy still needs to come from somewhere. I think, yeah, real rates, that's what I was trying to say. So when we look at the real rates, I mean, if they raise them 2-3%, I think the market still might not freak out, and it's going to be low enough to keep that liquidity, keep that money cheap, and keep those companies borrowing it. But in the short term, it's just complete volatility. Yeah, on big oil, I think it still has room to run. I've heard people say we could have, I don't know, $130 a barrel oil, which would be crazy. But I do know that in the past, when oil has gone up pretty high, that the market has, I think, a recession followed or downturns in the market when the price of a barrel of oil spiked something like over 108, 105, something like that. 100. I don't like to say syllables sometimes. Yeah, but they are a bit. Let's take a peek. Let's look at my favorite here, ExxonMobil, over the long term. Oh, let me look at what this looks like with my overlay. Is that okay? Somebody let me know. Is that too small? I don't know if I like how that looks. I threw that together. Newest subscriber. So there's this little widget that'll show if somebody subscribes, like right now, it'll pop up and say they're the newest subscriber. Yeah, I don't know. Somebody give me your opinion. Do you like that better? Or do you like the, do you like when I just did the full screen here? Let me go in my cheat sheet here. My cheat sheet. So we need to go like this. And now we should have the full desktop. So I don't know. Let me see what that looks like. I might not use this. I was trying to get too fancy. I think I might look it better when it transitions. Let me watch it. I want some opinions now. Petty Officer Knopf says so. I was a petty officer in the United States Navy. Got out in 1999. So I'm playing around here a bit. Let's see. Ah, it did it. No, it hasn't done it. There we go. Ooh, look, that looked pretty cool, huh? Hey, I don't know. That was my little transition I built into this thing, so that didn't look too bad. I think this might be a little better, easier for you guys to see. Let me know if you concur from my esteemed colleagues. All right, let's get back to business. So what are we looking at here? We're looking at Exxon. I'm on the weekly. Yeah, Exxon hasn't been this high since well before the pandemic. And this, I know I can change how far back we go. Let's see. Period weekly. How did I do that? Yeah, so weekly. Oh, Christ almighty. Where is it? Range. Here we go. Here, let's go back 5 years. What did oil get up to? Oh, for crying out loud. You see what I did? I put in my hotkey and it put a plus in there instead of ExxonMobil. Okay, now we're on ExxonMobil. Now we will go and change this to, let's go 5 years. And survey says, wow, look at that. Now this is pretty interesting. Great point, Dennis. In 2018, we hit a high of 71.39. And then in the fall of 18, we hit 72 and then 70. So, that's really interesting. Just looking back historically, that ExxonMobil kind of hit peaks right around $72 a share, and we're at 75.28. And these might not mean a lot to a lot of you. Big chart's great. Okay, good. We won't play around with that fancy stuff. Maybe I'll find a way to work that in some other way someday. But so this down here is an indicator. This is the money flow index. This is if money's coming in or out. So money's still coming in. But yeah, we're 75 on the RSI, so we're pretty overbought. And on the CCI, which is what I like, when it gets up around 200. So I think Exxon might be pulling back here. I would not be surprised. Let's see Chevron. Wow, look at that. So Chevron is just clearly at all-time highs. 111, 110, 111, 109 back in April of 21, and then just up to we went past 135 this week. And a little bit of the same story. We have way over on the CCI, and it's making a lower high on the RSI above overbought. So that's interesting. I think oil might be pulling back. And yeah, let me run through this news real quick. I didn't even go through these. I saw Omega. Dennis brought it to my mind. Lockheed declared their next dividend, no change, 280. Apple, we know about. Dude, Apple's earnings, insane. I wish I bought more Apple. Exxon, yeah, no change. I did a video, I think you guys saw it, on the increases. Kind of easy. This makes it super easy. Here, we'll watch. So on Simply Safe Dividends, I'm happy to just share this information with you guys. Click on their World of Dividends, and it just gives you it all right here. It's so quick, easy, simple. I think I might make some quick videos maybe every 2 weeks, just go over some recent dividend increases. And we're still good here, right? Yeah, we're still good. I can jabberjaw quite a bit. If anybody's got any ideas, let me know. I mean, I've always got ideas. We can look at, here, we could look at their ideas. Why don't we do this? This one really cool thing I'm liking about Simply Safe Dividends is that they show oil too. Yeah, I'm not buying any more. I did buy a share of Exxon, I think in the high 60s, just because. And let's see if, yeah, so they give you these lists like monthly payers, MLPs. It's not terribly a lot, but here, if you're looking for high yield stocks, I like it that they'll give you the timeliness. And this is, of course, based on their 5-year average, the dividend yield, which, of course, we want to get a dividend yield that's over 5 years. And let's see, Universal Health REIT, Leggett and Platt might be undervalued. Phillips 66, interestingly, but it's kind of cool. You can see the spikes on the dividend yield, and now that's coming down. EPD, Enterprise Partners, there's Verizon. And then, these are reasonably valued. They're all relatively safe companies that they rate. I don't know. I'm digging Simply Safe Dividends. I mean, I'll pop on once a week and share some ideas with that. Yeah, oil's a bit expensive. What else do we got? What do you guys think about the market? I mean, for me personally, I just share a quick thought. Here, why don't we do this? Hold on. Bear with me a second. So I want to do only me. Bam. I think that's going to go just to me. Hi. So just a quick thought. I think about with dividend investing, which is what I primarily do. And obviously in my big IRA through work, the 401k, luckily I can pick some Vanguard index funds that I just put a lot of the money into because I get the employer match and all the pre-tax dollars. I can't do individual stocks, but I can do Vanguard index funds, which is really cool. But and I'm all in equities in that. I'm not worried about bonds. I've still got years to go. Let's see. New York Community Bank Corp. Earnings met, growth maybe not so good, but the book value is interesting. Yeah, let's see what Simply Safe. Do you know the ticker? Here, let me see. I'll search it. Let's see what we got here. I can't type. There it is. New York Community Bank Corp. NYCB. Borderline safe dividend from Simply Safe. Dividend yields about in line. They're going to tell about it. Let's see real quick. Obviously, they provide banking products and services in Metro New York, New Jersey, Ohio, Florida, and Arizona. Sure, why not? Florida and Arizona and Ohio. Okay. Let's see their dividend streak, 5 years without a reduction. They did cut it during the recession. This is interesting. I like how they just put this stuff right here and I don't have to hunt around. So that might be something to worry about if we're, depending on how deep the recession goes. That could be cut. Looks like they cut the dividend in 2015. And it's pretty much been frozen at 17 cents. Yeah, ever since they cut it. FC says, I enjoy learning about dividend increases from popular and semi-popular stocks. Helps give me potential purchase ideas. Yeah. Same thing with, like I said, with what the hedge funds hold. I know, what was it? Insider Monkey, I think, has that. Here, check this out. We're all over the place. So Insider Monkey, they track like hedge funds and the big, yeah, funny. They here, you can click on hedge funds, and I haven't been on this in a while, but I thought they had a list of all the different hedge funds. Well, that's pretty. BlackRock. Yeah, so you can just play around with it. If you want ideas, go to Insider Monkey. Here, 10 best dividend paying stocks to buy according to David Harding's Winton Capital Management. So they'll pull data from a lot of the hedge funds. They track, I don't know, a couple hundred some hedge funds, and they will let us know. Oh my God, with the pop-ups. Let's see who they got here. State Street, STT. I've seen them around. We'll just blow through these. PepsiCo. Hey, PepsiCo. So here, this is cool. So what they'll show is that there's currently 61 hedge funds that hold PepsiCo. Dennis says he thinks the market depends on a big tech like Apple and Microsoft. Yeah, in that article, Jeremy Grantham calls them the Big Eight, the Big Tech Eight, I believe. And yeah, they give a little blurb. So you can use this for ideas. Allstate, ticker ALL. Evergreen, Evergy Energy. And they'll give a little blurb. Newmont, they're a mining company. I know I've looked at them in the past. And then you have to click for the top 5. So let's see the top 5. But before we do that, for our friend, let's see what Simply Save Dividends had to say. Yeah, so the dividend yield's about in line with the 5-year average. The P ratio is well below, so that's what we want to see. 52-week range, it's only a $10 to $14 stock, so it's toward the middle, the lower middle, and it's well below the sector. Couple quick metrics. So it's interesting with the financial companies, you can't use them the same as like a PepsiCo, so it's always best to like compare to the industry. Long NYCB. So what do you love about it, FC? What do you like? What's something you like? Right? That should be the thing. Tell us what you like and why. Free cash flow payout ratio. I know with banks, you want to see them have a high debt, right? They make money on debt. So if a bank doesn't have a lot of debt out there, it means they might not be making loans and they might not be making money. So sales growth, okay. Shares outstanding, nice. They haven't really been diluting that much. Total sales, 1.35 billion. Had taken a dip in 18, 19, 20. That's come up. Return on equity, 9%. So that's right at what they expect. Yeah, and you can't, net debt to capital, 0.67. Interesting. I don't know. I think it looks good. Let's see what he says. Small position NYCB considering increase. So, earnings payout ratio. So this is why I think they give it unsafe, is because below 40% is the preference that they want, and they're at 49. But I mean, that's probably why they cut. So let's take a look. So they were at 97% in 2017. And when was that cut? I don't remember. And they cut it in 2015. So they cut it in 2015, and they're at 90%, then to 66, then 97. So I guess that'd be something to keep an eye on. And I guess 49 isn't terrible. So, I don't know. Looks good, I guess. What were we looking at? Oh, back to this. So let's see what went in. ExxonMobil, 64 hedge funds hold Exxon. Oh, you know what I need to do here? Isn't this ridiculous with the pop-ups? I thought there was a link to see all of them at once. Maybe not. Philip Morris, that's one I didn't buy. I went with BTI instead. IBM. I sold out of IBM just because it looks to me like they have a bunch of financial shenanigans going on, accounting, where they have an adjusted free cash flow ratio, and it looked like they were taking on just as much debt necessary to pay the dividend from what I had looked at. So I didn't like that. Verizon, which I'm still considering adding to, and 57 hedge funds hold that. And then last but not least, Altria, Big Mo. I got Mo. I know a lot of you invest in Altria, and yeah, so that's Insider Monkey. Now I thought, yeah, play around with this. It's really interesting. They have a monthly newsletter that I've never subscribed to. So if you can deal with all the pop-ups, and here we go, top fund managers, Buffett, David Einhorn. Interestingly, I don't see Ray Dalio's name there, which I do like. What was I saying about the markets? Oh, am I full screen? Oh my God. Well, this is what you get when you have somebody that's not looking at what they're showing. So, boy, this is embarrassing. Now, what do I need to do here? So go to the full desktop. Hey, we're learning here. It's going to change. Well, thanks for sticking with me, all 10 of you, as you looked at the lunatic basically talking to you, staring at a computer screen. Well, it's nice I got to, oh, for crying out loud. So here we go. I'm not going to go through it again. You heard me talk about them. We'll do the first one. Insider Monkey. There it goes. Now that looks a little better. Well, a little bit of, I'm just going to leave it at this because until I improve. Yeah, Dennis, BTI is a great income stock. I think so. It's really interesting. They're all trying to go to the heat not burn and the reduced harm, because it turns out apparently that killing your customers is not a great business model. So this is Insider Monkey that you can go to. And there's just lots of ideas here. You can see what the hedge funds are holding. They'll do like a theme, the top 10 biotech stocks that are in Jim Simmons's quant portfolio. So we clicked on this from David Harding's Winton Capital Management. These are the top 10 dividend stocks that they hold that we just went through, and you click on that. And I know it's on here somewhere. They'll show like the top stocks held, and hey, Darth Dividend. Well, we just had a hiccup because here, for my guy Darth here, check this out, man. So I went to, let's see. So I got my full desktop on. I'm sharing this with you guys. So we'll go to only me. It's going to transition. Bam, there I am. Very nice. I had this overlay that the general consensus was it's a little bit too small. It looks fancy, and I think this is for gamers, but I don't think it's going to be really useful for what I'm doing. So now let me go back to the full desktop, and bam, here we are. Thank you, Darth. We got to do a chat sometime, man. It's really bright where I'm at. I got this little sheet hanging up, and the transitions. It's like a kid playing with toys here. All right, so yeah, so anybody. So what do you like and why? We are looking at, what were we looking at? So on the chart here with CVX, very interesting that I could see them pulling back. And let's look at this. We got to change the time preference here. It's going to be, the candles are too small. So we'll change it back to the fill the chart. And we'll go 2 years. There we go. That's a little better. Weekly. Yeah, so right around right now, 110. Looks like there's pretty good support. And after that is all the way in the 92-ish. So interesting. I think these oil stocks might be pulling back a little bit, but we don't know when. We have no idea how to tell when that's going to happen. But I think what I was trying to say before is that crazy. My channel. Well, I'm still the only way I'd like to do a live stream, but actually Nora was in here a minute ago. She does them all the time. I might have to hit her up because oh, Intel. I'll get to Intel in a second. Yeah, Dart. So I'd have to do a Zoom and then we could record it and then release it. But it'd be cool to do it live and chat. I know there's a way, but small baby steps, as you can see, I'm learning, I'm growing, I'm doing things that are uncomfortable, and I appreciate all you sticking with it. I love the community. You give me ideas, I give you ideas. I like it going both ways like that. I'm moving the wrong mouse here. This is the right mouse to move. So let me make sure, double check. Okay, we're on the right page. We got our screen. Hello, Sunday morning stocks with a lunatic. Anywho, what were we talking? Oh, dividends. What I love about dividends, and one thing I think is really cool, is that I'm investing and betting on businesses, on big successful businesses. I tweeted this out, like Pepsi and McDonald's and Walmart, that no matter what the stock market is doing, because the stock market is not the economy. I mean, they're intertwined, but they're not exact, because we've seen when stocks like Walmart or, drop 50% in the market, well, their business didn't drop 50%. From what I look at, they were still selling products, servicing customers, making money, having a lot of cash coming in the door. And it's those companies. So as we're investing for dividends, primarily coming in successful businesses, the market can crash and it shouldn't really affect us that much if we know what we're investing in and what we're doing. Yeah, man. Take it easy. Take it easy, Darth. Oh, by the way, in the yeah. It is baby steps, man. But you know what? I've got the rest of my life, so no need to rush it. Yeah, in the beginning, I wanted to rush things and just do everything, but it's cool. Yeah, we'll see you, man. We'll be in touch. We'll be in touch. What was I saying? I've always saying, in the military, when you salute, now it's funny. You'll see people do like this. It's keeping the sun out of your eyes. The way you do it is you take my broken finger here. By the way, that's what happens when you break a finger and you do nothing with it. It just heals all messed up. So this little space in between your middle finger and your index finger goes to the corner of your eyebrow. And that is a proper military salute. Now you know, and knowing is half the battle. And yeah, so Intel. Dennis, Intel. Let's throw up. Let's not throw up. Let's put Intel up on the board. Put it on the board. Intel, 96. They give a very safe dividend safety score. I've been buying them. I just started buying them individually. They're a very new position that I've been buying. So I like them because their new CEO, Pat Gelsinger, he has a big vision for the company. He wants to turn this company around. And my guy, the European Dividend Growth investor, has a very, very astute point that this reminds him of when Satya Nadella took over Microsoft back in the early, 11, 12, something like that, that he really turned that company around. So he thinks this is reminiscent of, and I hope so, when the new CEO came in and just made it exciting, made the company really, really successful. Yeah, they did just increase the dividend, didn't they? Let's check that out. They did 5%, I think, because I think I did a video on that. Let's see, key metrics. Yeah, dividend growth. I mean, come on, check that out. The last 20 years, average of 15% per year. Last 5 years, only 6% per year, and the latest was 5% this month. 23 years of uninterrupted dividends, that's solid, and 7 years of dividend growth. And yeah, they just like clockwork, man, just increasing it. That nice little 5% So yeah, the dividend yield is above, but the PE, the forward PE is above. We'd like to buy it when it's below their own 5-year average. And check that out though. There you go, man. Nice call. With the 52-week price range just buried at the very bottom of that 52-week range. I think that is, this is a great point. Man, I love this community. I love learning. That might be something, is to look at companies that are hitting their 52-week lows. I'm sure everybody knows this, or not everybody. I didn't think of it till now. Looking for ideas at 52-week lows, right? Dumpster diving, maybe? So Intel, I think I'm going to buy some more Intel this week again. I bought one share last week at 48 something, 48 and change. And yeah, the infotech sector, their PE is below the sector. Free cash flow payout, 58. So this is interesting. Simply Safe Dividends, like they do it by sector. So they have semiconductor firms they like to see under 50, which is cool to see, but they're at 58. I personally like 60 is nice, or 70 is nice. 60 is even better. So I think they're fine. ASG Chris, what's up, man? What's going on, baby? We're looking at Intel, sharing some ideas. If you got a stock idea, tell us what you like and why. We'll take a peek at it. I'm going to look at the chart here. We're going to see how low this has been for Intel if we got support. But yeah, just real quick, I think a lot of their metrics look good. Although they predict the next 12 months, the earnings per share is going to fall off. We'll see. Free cash flow per share fell off a bit. So this is probably, something that people are worried about. But look at this. Here's something I like. This is nice to see. And this gives me the warm fuzzy that they've been buying back shares and their sales have been increasing. So, earnings per share can be manipulated by buying back shares, but at least that sales is the numbers. That's the money coming in the door. So that's a little bit harder to financially engineer your sales unless you're selling to a dummy corporation or something, which is, I don't know if that's against the law. I think Nikola was accused of doing that. Like they had 8 sales. What are they? The hydrogen, whatever they are. Let's see. He enjoys the overlay with my picture. Good. Thank you, FC. We'll do that. I'll probably do that. I think that overlay here. I'll show Chris. He just came in. This is the home button. So I was thinking about using this. And I think it'll swap out there. Swap out. Do it. Do it now. From Germany. What do you think about Arnold? He was Austrian. Is Austria Germany? It used to be, right? Back in the day. I think what we're looking at now, is gaming. This is good for gamers. And I don't think it works well for talking about finance and stocks and showing charts and stuff. Because I got to remember, a lot of you are watching on mobile. Yeah, there it goes. So Chris, I'm watching this delayed. So yeah, I got my second monitor here. I don't like it. Let's go back to this. There we go. One more thing about Intel. Operating margin, really high. Nice. Free cash flow margin could be a little better. Not a lot of debt. And their interest coverage ratio. I love this. Let me see if I can blow this up. The interest coverage ratio. Look at this. This is pretty cool. So the ICR ratio is how much operating income you have to cover your, sorry, I'm watching my screen flip back. It's such a delay. How much operating income you have to cover your, every $1 of interest expense in this case. So when you see $36.99, that means they have $36.99 of operating income to easily cover every $1 of interest expense. And above 8 is their preference for semiconductors. So Simply Safe Dividends thinks they should have at least $8 of operating income to cover every $1 of interest expense. So I think Intel is a great play, a great long-term bet, and yeah, they give them a very safe dividend safety score. 99 is the highest that they give. So let me move this down a little bit. Just a little bit more. Austrian. There he is. About to create ASIC miner. You know what, Chris? I did not know that. Intel is about to create an ASIC miner, and they are expanding into crypto. I don't think crypto is going anywhere. I think this kind of reminds me of the dot-com bubble that I lived through. Again, I know you guys know I've said I wasn't investing in the dot-coms, but I had my uncle had a good friend that was, and I had a friend, and they were both trying to get me to set up a Scottrade account. And one thing I didn't like about it was I think it was 19 or 20 bucks to place a trade both ways. So I didn't like it that right out the gate, I was negative 40 bucks if I was going to make a trade. I had to have more than a $40 gain just to break even. And I didn't like that. So they kept telling me, dude, just if it has a .com, buy it. You'll make money. It's crazy. They're like, it's the new it's the new gold rush. Just .com, buy it. And then it worked until it didn't. And then they all went away. So they all didn't go away. A lot of the .coms went bust. A lot of them struggled. Not Intel. Who's the other one I own? Come on, guys, help me out. So there's Intel. One of the companies was up there, and they went. Cisco Systems. They were one of the .com bubble .com darlings, and then the bubble popped, and they have. I think they still have uninterrupted dividends. I don't think they cut, but they took a big hit that they never recovered from. And let's see, getting better at this, huh? Dividend growth. Cisco. Yeah, so look at that. Going back to '08, it just was nothing. Or they didn't, maybe it wasn't. Maybe it was Intel. I don't know who I'm thinking of anymore. Let's check the chart, actually. Let's see if it was Cisco. And we can pull back CSCO. And we'll change this to, how far back can we go? I don't know. Can we go all the way back? Holy cow, look at this. I don't know. I've never gone this far. Oh, I slide this. I don't know how far I can go back. Anyway, how about we just check, do it the easy way, right? Go to Google. There. Let's see. Here's Cisco stock, and then we'll do all time just to get a simple line graph. Max. Yeah, look at that. It was Cisco. So this is what I lived through. Check that out. In 95, they were $1.95. And then right before, dude, April 20th, 2000. That was my 22nd birthday. Look at that. They were at 65 bucks a share. And then just plummeted to 15 in a matter of a year. April 27th. So almost 1 year later, they went from 65 to 15. And look how long it's taken Cisco to get back up to almost there. So they hit 61. That's not right. They had to be higher. I don't know. There we go. 77. Yeah, 80. Duh. Read the chart. TradingView might be easier. You know, it should be. I played around with TradingView in the past, and I usually use this for my quick. I have my my quick little chart. I usually don't try to go back, 20, 30 years. I'm usually just looking back a couple years. And yeah, I don't know. I like the layout of this. I can't get used to TradingView. I've tried it, but if I'm going to show charts more, I probably should. And here, we never updated that. Here's Cisco. Yeah, looking at Cisco, so they've come up pretty high from 28 to 44. And I think they got a little bit more room to run, but they're going to have some resistance right around 45, 44, 50, 45. So, yeah. Maurice, what's up, man? What's going on? What else we have? Dennis said IBM is on a good way back now. I don't know, man. I'm so skeptical of IBM that, they just spun off Kyndryl, and I think I don't know. I think they're trying to shed dead weight to make themselves look a little bit better, but they're still borrowing a lot of money, and I don't Well, let's see what Simply Safe Dividends has to say about old IBM, what they give them. I love it. I love it. Anybody watching football today? I don't know if I will. I don't know. Actually, American football. For Dennis, I know soccer, you call that football. 65, so I'd probably agree with that. It's not super safe. But let me see a couple things here. Yeah, they've been growing it for 26 years, so they're a dividend aristocrat. They're growing it lately about a penny a year. So that's slowed down. That's one thing that makes me nervous. AT&T did that. So 2019, they went from 157 to 162 in June, then 163, 164. They've really kind of slowed that dividend growth. There it is, 0.6% in April. The last 5 years was 4%, but the last 20 years is 13%. They're right in the middle of their 52-week range. They're still below. Their PE is below the infotech sector. Earnings payout, yeah, so they'd like it below. That's free cash flow. They're right up there, so 56. Free cash flow, I love looking at free cash flow. Earnings per share. Sales, ugh, nasty sales growth going back all the way to 2012. Earnings per share growth isn't that very good. They have been buying back shares, and then they stopped. They were at $8.97. Now they're at $9.05. And here, this is what I don't like. Check this out. Total sales was $103 billion in 2012, down to $57 billion in the last 12 months. You know, that would have me worried. Their return on invested capital just been shrinking. Return on equity has been shrinking. Everything is pretty much shrinking. Operating margin, net debt to capital. So they have a bunch of debt. Oh, there you go. Interest coverage ratio. So they only have $4.83 of operating income to cover every $1 of interest expense. So, you know, I'm leery of IBM. I got out in the bridge and the Roth. I think I still have a few shares. Almost too soon to understand the American football rules. That's funny, Dennis. So when I was in Australia, we were at a bar and they had Australian rules football on. Had no clue what was going on. It looked like a combination of rugby, soccer, football. We didn't have a clue what was going on. We were just watching the TV, and at some random moment, everybody would be screaming and cheering, and we had no clue. So, IBM, cool. Well, I don't know, guys. We shared some ideas. I wanted to keep these around an hour. I know I started it a little bit late. If anyone has something to say, let me know. Let me hear it. Holy cow, we got 15 people watching now. Dios mío. 15 people. Gente. 15 gente. Yeah, so IBM. And I don't know. What do you guys want to... Somebody give me something. Let's look it up. What is a stock... If you're watching, shoot it out there. What's a stock you like and why? Or you want to... We'll see if we can figure it out. I'll give a few more minutes. My daughters are going sledding today, so it's going to be the wife and I. They're going out with their friends, my children, the little children. They're getting older. Okay, children. That used to crack me up. Michael Jackson, if anyone remembers. Loved his music. When I was a kid, his big album came out. Stifle Financial. Let's check it out. I don't even know the ticker. Do you? BEP. What do you think? I just learned WDYT. Brookfield Infrastructure Partners. I know that they are, I think, an MLP, right? They're a limited partnership, I think. Let's see. I never terribly dug into them. BEP, I think, is it, right? Leg. Oh, I love Leg. I don't even need to look up Leggett and Platt. I love Leggett and Platt. Mwah. They're a company that's super, super boring. They are officially a dividend king, although I do believe they were removed from the S&P 500 because of their market cap. They just barely missed out on it. BEP, borderline safe dividend. Yeah, owns renewable power generating facilities. Now, I like that. Wind and solar. I'd like to see more. I'd like to see more nuclear. I think nuclear is the future because as all these EVs keep coming online and replacing the combustion engines, that's going to be a massive demand for electricity, which has to come from somewhere. And I don't think hydroelectric, wind, and solar are going to be able to handle it all and power the world without oil. Let's see. Ooh, interesting. So their recession sales were 0 and they had no dividend paid previous to 07-09. 2-year dividend growth. Wow, interesting. So yeah, right out of that recession in 08, they cut the dividend to 0 and they did not increase it or reinstate it again until what, 2011? 2010, 2011. That's interesting. Yeah, like I said, I never really looked in. Their dividend yield is pretty far below. Let's see, it's 32% below the 5-year average of their 5-year average. And the PE is high. Or no, I'm sorry, the DCF. Why am I having a brain fart? Was that distributed cash flow? Distributable cash flow. So, I don't know. I think there would be room for concern that if they hit troubled waters, yeah, there have been slightly increasing shares. At least their sales are still increasing. And return on equity, not very good. I don't know. I'd be... interest coverage is 0.98. They have 98 cents of operating income for every dollar. Yenko, bought them in 2020 and they're lower now. Well, it cycles, man. Let me look at this real quick. See if I can at least see if they're on the upswing. Here, we'll look at the weekly chart. So it gives us, sometimes I look to, hey, that's ugly. I like to look at the weekly chart because it takes out some of the intra-week volatility. By the way, I think I read that every day this week, there was like a 22% swing. Every day. It's been a 2 or 22. There was a 2 in there somewhere. Let's see what we got here. So 1589, basically around 1580 is where massive resistance is. And it went all the way down to 1223 a few weeks ago, which was about where, you know what? I'm still wrong here. Let's do this. Belay my last, we used to say in the Navy. Let's look at the last 2 years. Let's get the chart right here. It'd be helpful if I wasn't reading a chart from a year ago. Yashishmaria. That's something my grandfather used to say. It's Yiddish. Interesting. They've been in a pretty steady chop. Check that out. Between 43, or lately 39, 41, and 35 to 32. And if I look at the chart and get my crystal ball out, money flow is starting to still pointing down. But I think I like this CCI right here. There is a lower low on the CCI right there. So I think we're going to go up to this line right here, which is the 50-week moving average. See how it kind of had recent resistance right around the 50-week? You know, I think I don't know what your average is, but I mean, they're still paying a dividend at least while you wait. So in my opinion, not financial advice, I would probably hold BEP. And I think this will probably be around 36-ish. So I think it might come back up to around 36, 35, 36, 37 in the next 3-4 weeks. That'd be my guess. But again, it's in a kind of a somewhat downward chop, sideways chop, pointing down. But I don't know. I would hold on to it. That'd be my... Oh, here we go. What do you got? PPL for nuclear. Hey, you know, honestly, I don't off the top of my head ring a bell. Oh, Ian Lopick, that's his stock, right? They were in England and the U.S. here. Oof, interesting. Dividend safety score of 4. Yeah, U.S. and U.K. I know this was one of Ian Lopek's stocks. I don't know if he still has it. I'm assuming he does. But 21 years of uninterrupted dividends, 9-year dividend growth streak, and 41 and a quarter, 41 and a half. So they haven't raised it since April of 20. And let's see. Oh, yeah, look at that. Their earnings payout ratio is really, really high. So, and again, free cash flow payout ratio for utility companies, they're really capital intensive. So they're really relying on the earnings coming in because sometimes it takes a while to realize that, and they're regulated. So you know they're going to have money coming in. So this is why with utilities, it's much better to look at the earnings payout ratio instead of the free cash flow payout ratio, which is still really high, paying out currently 117% of their earnings in the form of the dividend. So that's not sustainable. But that, again, this could be an opportunity if you're looking for in the future. But what was that? But see, they're still toward the, well, they don't move much. 26 to $30. They're still toward the high end. So I missed any of this. If I know something. Yeah, JPM and Intel. Yeah, Intel we talked about. I like Intel. I think Intel is a fantastic turnaround play. They're getting into crypto, as Chris shared. They're the foundries is what they are going after. They want to start making chips not only for themselves but for their competitors. They're the biggest chip maker by sales, I believe, still globally. And I think their market cap is about half, well, especially now with that fallback, is about half of Taiwan Semiconductor. And Maurice, I was looking at T-Row. Who do we got here? JPM. JPM, let me see what they're doing compared to themselves here. I do own JPM. I was buying them. I think they'll be just fine. The banks, they give them a 60 borderline safe score. Big mega cap, 432 billion. Yeah, so I only have a couple shares. So I like it. They give you your shares here. Let me look at this. Interesting. I didn't realize they cut their dividend coming out of, well, it makes sense. The banks had problems back then. So yeah, but look at that. If you would have hung on to them, check that out. What a buying opportunity in 2010. Your yield, you'd be getting way, way more than if you just held on. So what a great time to have bought right there. Unfortunately, I didn't. $1 a share. I think the banks are going to be okay, right? The government stress tests them. They don't want this to happen again. And some of these big banks, I don't think the government's going to let them go under with the whole too big to fail. You can disagree with it, but I think that the banks are not going to go through what we saw them do coming out of the last recession. And yeah, good earnings per share payout ratio. I think they're safe. Again, free cash flow. Yeah, they loan out so much of their money. That's how they make money. So I think that's in the, let's see, and there's shares outstanding. They've been buying them back, and their sales are up there. So they're pretty healthy. Yeah, no interest coverage ratio because they loan it all out. Net debt to capital. You want them loaning out money. The banks should have a lot of debt. So I think JPM's cool. Roblox. Oh, let's see. Getting back to 100. Oh, yes. Well, yeah, let's take a peek at Roblox. My daughters hold Roblox, and we bought it for them around $85. That's a weekly. Yeah, look at that weekly fall. Goodness. Blow that up a little bit. Oof. Yeah, 141 back in November, down to 58 now. So they are getting back to where, I'm assuming this is their IPO, yeah, right below 50. So pretty soon it's enough people are going to come in. I think they're a good metaverse play. The world is going toward the metaverse. I mean, there's so many big companies like Nike and Walmart, and they're all trying to enter the metaverse, and it's so early. I think if we were looking at the internet compared to the 90s, I want to say we're in maybe like 96, 97. So most of the world, if you're looking at crypto and the metaverse, most of the world isn't just in it yet. It's still early. It's really early days. But anyway, look at that. I think it's going to take some time. But a lot of these companies, right? Companies that need that cheap money, they're going to be they're going to be hard pressed, and we're going to be focused more on their fundamentals and the money that's coming in the door. Oh, an ad blocker. Yeah, that's probably a good investment, wouldn't it? Thanks for the heads up. If I'm going to be sharing these, you're right. I probably should be looking instead of going, hold on, let me close this. So, yeah, I don't know if they give, let's see. Let's put in Roblox here in Simply Save Dividends, even though they don't pay a dividend. Just for some metrics here. Yeah, there's not a lot of history on there, but free cash flow per share, it's come down a bit. Earnings per share, that's not good. But look at that sales growth. I mean, 115% sales growth. That's phenomenal. They're going to turn it around. I think this I don't like to see. One thing I always say is if you're a company and you're going to be diluting shareholders and issuing shares like this, going from 182 million, which is not a lot, to 409, you also better be increasing sales, because when companies are putting more shares out there and bringing in more money, if they're just burning that, that's only going to last for so long. Like I think QuantumScape has been doing that quite a bit. Let's look at QuantumScape. They're not a dividend. They have revolutionary technologies for their battery. I think they have like 200 patents. See, same thing. They're burning cash, and they still have no sales. So this is even riskier. Something like a QuantumScape. Sorry, looking at that face. I'm gonna look into an ad blocker. Yanko Chamov, if I said that correctly. So that's something to always think about, is a lot of these companies that are burning cash, if they're not also generating sales with that, then they're just selling shares. Like I look at it as they're in the business of selling shares. A lot of the story stocks do that. So right now, QuantumScape is a perfect story stock. They have no sales and they keep burning cash. They keep selling more shares every year. I mean, check that out. They went from 11 million in 18. I think they IPO'd in 19, right? To 240 million, 252, 370. So just a helpful thing to always remember is that, and see return on invested capital, it's still negative, but it's trending in the right direction. And their net debt to EBITDA, Buffett and I are not fans of EBITDA because depreciation and amortization are actual costs to a business. So I don't know why you're taking it out other than manipulating the stock price. So Malta, any views on EPD? Yeah. Would I buy Roblox now? I would, and I've thought about topping up my kids, maybe getting them another share because they're playing it. So I see it. My kids were just on Roblox this morning, and it's the strangest thing because what they do is they'll play Roblox with their friends, and they sit around for an hour or two, and one of them will have a laptop open so they can see each other. And then all I do is just hear all these teenage girls' voices while they're all playing Roblox. And I don't know if that's going away, but Roblox, as we saw, their sales were still 115%. They increased sales. So they got a lot of sales, and it's just a matter of time. That's like what Tesla did. They kept increasing their sales, and I do believe they were still diluting shareholders. But let's look at Tesla, the mighty Tesla. My daughter has a little bit. Yeah, check that out. So Tesla in 2012 had 537 million, and then up to 1.13 billion shares right now. So they have been diluting, but check the sales out. This is what I'm saying. Their sales, 201, 320, 405, 7. Every year they kept increasing sales, and people kept bagging on Teslas, and I bought into it. I had some shares of Tesla pre-split under 200, no, right around $200, and I sold because they're going bankrupt, and it was just a big mistake. So that to me is one of the keys. I don't like to see dilution. I don't like to see shares being sold. I love to see the shares being bought back, but that's usually the big companies like Pepsi are constantly doing that. But the companies that are growing like Tesla, they need more money coming in. And as you can see from right here between the shares outstanding and the sales, I mean, it's just, that's perfect from what I'm looking at. So always look for the sales. Roblox, their sales are stepping up. And I guess I would get worried if their sales start declining. I would probably go out. So yeah, I'd feel comfortable buying Roblox here and holding it for years because, again, we're still in the early days of the metaverse. Interesting. Tesla. Bastards. Why did I listen to those people? See, my wife don't sell Tesla. I see more and more of their cars. I'm like, yeah, but you're not an expert. Listen to the experts. And we missed out on what, 10, 12 grand or something because I listened to the experts. So if there's times you're convicted, you have conviction. If you're convicted and in jail, you're probably not investing. But if you have conviction, sometimes just go with your gut. And there's the thing too. If you like Roblox, buy it and hold it, even if they go bankrupt. I mean, as long as it's not a position that'll ruin you. If you like a company, I don't care what anyone says. This is something I've learned. It's all about you and what you have. It's your portfolio. So take other people's opinion, take my opinion, but nobody knows what's going to happen. And what else did we look? JPM we went over. Yeah, the kiddies play Roblox all day. I agree. That's interesting too. See, Dennis is in Germany, and Derek is another dividend investor I talk with, and he is at EMF. He's part of Dividend Talk podcast. His kids are always on Roblox, and they're in Ireland. So it's truly a global thing, and it's really interesting that he says they want more Robux. We have to buy Robux, and that's where their sales are coming from. So it's really, I think it's really sticky, and it's really expansive. People can build games within the game, and it's more of a community atmosphere. So who knew this would turn into the Roblox hour? So let's get to Mario's, and then I think we might wrap this up with who's he got? EPD. EPD, I like them. They are a limited partnership, so I don't know if you have tax-advantaged accounts out there. So here in the United States, yeah, they have a dividend safety score of 65. Here in the United States, limited partnerships, you get a K1, a Schedule K1, because they're a pass-through entity. As I make the joke, I say, you're the partner in the limited partner. You're the partner. And the dividends are not qualified, and I think they'll even say it here. So right here, K1 will be issued. And if we look at it, their dividend growth, very nice. 22 years uninterrupted dividends, 22-year dividend growth streak. And the payout was 186. So yeah, just know that their dividends are not going to be tax advantaged. But again, I don't know in Malta how that goes. Wow, that is awesome, Dennis. I love it, man. She plays Roblox. Friends from Cambodia. Khmer. I've read about that. The Khmer Rouge, right? That was Pol Pot's. Yeah, I won't get political here, but let me look at EPD. Look at them real quick. I know they're solid. I mean, I actually did just start a position in them. I don't know if I updated that. Crap. Let's see. This is the weekly chart. And so they have a lot of support right around the 200-week moving average of $20. And looking back, check that out. This is pretty cool. Let me blow this up a little bit. Just a little bit. All right, going back to, cut off my dates here. What is this? March? Whoop. Actually, yeah, right here it started. So right around February of 21, it has bounced off of the 20, what, 1, kind of 2, 3, 4, 5. 5 times since March of 21, EPD has not gone below $20 a share. It's at 23 now, which is kind of the high range. Looks like it has resistance there. So it's kind of pinging between 24, 23, and 20. So 23. I would probably wait. Yeah, so on my CCI, and we'll see if this comes to pass, it's dipping down. So it's probably going to come back down to that range where, yeah, I would wait. Honestly, I think a good entry would be right around 20, maybe 20.50, $21 a share. Buy some more there. 15% fixed tax on U.S. stocks. Wow, that's interesting. Every country has their own little different tax laws. I know Ireland is not very favorable to their tax laws as well. I do know a good copper stock. Freeport I gotta Google it. Freeport McMoran. I believe they had here. Let's see. What was it? FCX. Get the description from here. Back to the top. FCX. Nope. FCC. There we go. Freeport McMoran. Yeah. They primarily explore for copper, gold, molybdenum, silver, and other metals, as well as oil and gas. Unrated, their dividend safety score. They just started paying a dividend. Let's see that. Ugh. Yeah, so if you want to play on copper, here we go. Perfect example. For a dividend growth company, this is terrible. This is really not good. Just roller coaster. So again, it could be okay to hold, but as long as you know what you're buying, and 5 cents to 7 cents. So they've raised it a little bit, but let's see. Their earnings per share are okay lately, but just choppy. I mean, this is yucky. Shares outstanding, they've slightly increased. Total sales are still not too bad. Their debt's coming down. That's nice. ICR, pretty stout. Yeah, let's see. FCX on the chart. Are you thinking of trading it, or do you want to... Yes, good point. Boy, this has gone on longer than I expected. Holy cripes. All right, we'll make this the last one because, yeah, ad blocker. I'm going to look into that. What do we got here? So, again, I like looking at the weekly chart because it just smooths out a lot of the intra-week volatility. Where are we at? Looks like we're around some support, right around 35. Yeah, so it looks like it might be. But again, it can break through support. And if it does, I think 29 is where the next, $30, 29.30. Yeah, I think it might go there. So I don't know. That's one. I know there was I don't remember. There's a few copper stocks, but there's one for you. Looking at FCX. Choppy. It's obviously had a nice run up since the pandemic sell-off. Yeah. Anyway, anybody have any parting words? Got 12 viewers. I love it. Man, I told my wife, I said, I think I might do this for, I don't know. I think I might do it for, 45 minutes or half hour. It's well over that. But that's cool. I appreciate it. And let me go back to let me try one thing here. Go back to the overlay here and see if the subscriber changed. We'll give it a second here. Yeah, so that's a copper stock. I know there's its name escapes me right now. I can't think of them. Let me see. There's one I've heard bandied about. Southern Copper Corporation, SCC, I believe. Yeah. I don't know if they pay a dividend, actually. Let's look. But yeah, copper. Actually, you know why copper is good? Because copper, that's going to go into the EVs. That's going to go into the batteries, right? That copper wiring, copper. That's something, real quick side note on the EVs that I'm not terribly, I think it's a bubble because you're just, what what propels it is what's changing. It still has tires and windows and doors and headlights. And speaking of tires, how about Goodyear? So it's not like it's a flying car or something completely revolutionary. It's needed and it's good, but competition is coming. And, let's see. 6.3% yield on Southern Copper, but they have an unsafe dividend. Ugh. Yeah, there you go. So I guess this is just endemic of a lot of the miners. Looks like they go way up there and then come down. I mean, that's nuts. 35% per year the last 5 years. But we'll look at them on the chart and then we'll wrap it up with that. Well, check out their payouts. Looks like they have been increasing it every quarter. That can't be sustainable. Looks like they're just increasing it every quarter. Yeah, their dividend yield is way above. PE is actually below their 5-year average. Excuse me. They're toward the lower end of their 52-week range. So, that's interesting. Yeah, their earnings payout ratio is a bit high. I don't know. For me, this wouldn't be a dividend investment or a dividend growth company. Return on invested capital is pretty good. Return on equity is high. Southern Copper might be a little bit better just because interest coverage is good. The only reason I say it is just because of this. I don't know how long this trend will continue, but for 6 straight quarters, they have increased that dividend. So, if you want to throw caution to the wind. What the hell is that? Oh, that's not right. I thought their ticker was SCC, no? Oh, SCC. Oh, my bad, people. I was like, this ain't right. Whatever that is, stay out of that. Yeah, look at that. That's pretty similar. If we overlaid that to FCX, it's pretty similar. So that's just been in a sideways chop, and it looks like it's coming down, and it probably will go down to the mid 50s. It's at 62, 57 now. I could see it going to 55, 56, 57. That's another one you might want to hold, and I wouldn't recommend it as a dividend growth company. So let's see. Oh, I was on that overlay. I'm sorry, guys. I thought we were going. Here, I'll end it with my my full desktop. Nope. What am I at? Here we go. Boom. There we are. I think we're alone now. All right. So the newest subscriber didn't change. Either I didn't get any or it didn't. Let's see. Hold on. Okay. 3M. I think, here we go. Let me see. I could just do this all day. I love it. 3M. Yeah, it's been in a pretty significant downtrend. I think it's going to bounce from here. I don't see it falling much further. On the weekly, it is almost, let's check the daily chart. Oh, god damn it. Excuse me. I'm checking here. Embarrassing. So I close this other window next to me. Oh, the lawsuit. Why is that not ringing a bell, Philby? Now I do remember hearing something. So this right here, what I like, this is the CCI. When it goes this low, it usually has an upward. It can still go lower, but here we go. So in September, it hit 172 and it was below 200 and it went to 184. So I would not be surprised if this went probably into the lower 180s. It's 179, 180. So for a trade, this could be good. Earplug's not working. Oh, that's interesting because I actually use 3M earplugs in my job. DGI stocks to buy for February. Well, I'd say Intel. From what we've looked at, I guess I would probably say Intel just because they're at the lower end of their 52-week range. And Yeah, pull them up again real quick here. So 3M that's interesting. They are kind of in new. Looks like the next support is right around 158, 159, but I think they're going to bounce here looking at the chart. Again, the chart is just what might happen. It's what's likely. Doesn't mean it's going to. And I don't know if we looked at Intel. Oh my God, it's still on the, let's see. There, we'll just go back 2 years. I don't know what we did here. I messed up my Intel chart. But what the hell? I'm still showing this, right? Yeah, good. 3M hit with $110 million verdict in latest U.S. Well, I mean, if it's $110 million, that's a drop in the bucket to 3M, right? So, but yeah, I mean, if it's negative press. All right, Dennis, I'm going to be going too. I don't think we'll make these this long. I'm going to have to learn to cut off a spot. Yeah, Intel. I don't know what I did to my chart, people. Let me change it to weekly. I goofed it up for Intel. I thought we changed this. Oh, I never changed it. Here we go. There we go. Ta-da! I think it's right around support. So if it breaks 47.50, $47, it could be going down to 44. And I like it. That's the weekly chart. Let's throw it up on the daily. And then we're going to get out of here. I don't know. I screwed it up. Anyway, so Intel, I like. We'll do the overlay. Are you leaving, Jen? Talking to my wife. Taking my kids. Yeah, so that's interesting, Phil, and I must have missed that. But hey, 46 resistance. You mean support, I think, for their, depending on when you bought it, for Intel. Good day, Mario. Hey, I appreciate it, man. You know, you guys that stuck with it and all of you that popped in and popped out. This was fun. I enjoyed this. Let me see what I look like. What do I have up? There we go. I got that from me. Sweet. All right, guys. Well, I'm going to get out of here. I really do appreciate it. Maybe we'll do this quicker next Sunday. I'll figure out a way. I'm going to set a timer and we'll just we won't make it whatever this was, almost 2 hours long. It's just too much. So, I do appreciate it, and hey, let me know in the description below whatever you have to yeah, Phil. All right, Phil. Guys. Yep, exactly. You said it, man. That's support, but it can always break support, and if it does break support, then we look for the next support. So, yeah. By the way, this article I had said to check out Jeremy Grantham talking about what he thinks the bubbles that are coming, just a really little bit dark, you know, little dire, really interesting article that I would highly recommend checking out. And I'll put this in the description when it is over. Hey, good. We'll do it again. I will keep making them. I do appreciate it, everybody. And again, I'm learning. You can see some of the growing pains I'm going through. I appreciate it. I'm going to be 44 in April, and I'm a construction worker, but I have such a passion for investing. This is all I look at every day, every week. I'm listening to podcasts. I'm watching YouTube videos. I'm reading news. I'm just reading newsletters like Jeremy Grantham's. Anywhere I can get more information about markets and investing in my head. I love it. I love talking to you guys. I love sharing information. I love to hear, because I'm just one person. I can't catch it all. So I love it. So we're going to pop on out of here now. What did we have up? Yeah. Cool. All right. I'm going to hit my special button for hopefully ending the stream. And I will talk to all of you in the next video. Oh, and by the way, if you have any ideas for videos, always feel free to leave a comment in one of the video descriptions. I try to respond to every single comment. I read them all. So if you have any ideas or you want to see something covered, feel free. Mention it, leave me a note, and we'll see if we can get to it. So now,